Morning everybody, it's Chris here from Student Education with the 4 Majors Notice Update for the 2nd of June 2011. Hi folks, let's have a look at the Euro against US dollar on our CTC strategy. 6 time frames, started with the daily. Okay, what do we have? Well, straight away we can see that the Euro is moving further north. This after a prior support and resistance bounce and a break above a previous intermediate trend lower. You can see that swing low and then break higher and then swing high, which left us going in that direction. Let me just put that in so you guys can see it. Now what's happened is we've seen price fail to break and trade higher than the previous swing, in this case of this little area here that we saw on the 10th and 11th of May. Price failed to break higher, even though it is trading above the 50-period moving average for that time frame. It failed to close higher than that, and subsequently the following, or yesterday, we had a bullish up movement during the course of the day. Price fell to make gains on that, and then during the latter part of the US session, we saw roughly around about 6 GMT last night, PM GMT, apologies. Price pulled right back and closed lower than 50, and what was happening on the Asia now is we've seen the pair gaining a bit of strength, but now testing the underside of the 50-period moving average. So very interesting. What are we going to see today? Is this going to be another consolidation area? And if so, then it will need to obviously trade above the 50. Ideally, it needs to break the previous close, roughly around 1439.50. So if it needs to close higher than that, or the previous swing low at 1440, must, in order to see further extensions. Otherwise, what we're seeing here is just a breakout, a resistance area, and then pull back, and then a failure, and then we're going to see prices falling back. But what we could see is prices actually breaking out, pulling back, retesting, pulling back, and as long as it can stay ideally above this price swing here to the downside, this one over here, roughly at the 14,300, can't close lower than that. If it closes lower than that during the course of these 2 days, then we're going to see price revert to the downside. If it can find support at 14,300, then we'll definitely see another reattempt of the highs, primarily because we are now still trading above a previous swing low. This is going to be the new support intraday, 14,300, and if it can still trade and break higher than 14,400, then we're going to see a definite bounce to the upside because of this forming another swing high. So a break lower than 14,300 has broken the previous swing, the downside, and then we should be looking at ultimately 14,1200 or 14,1250 as our next target, because we've been there in the past. So break below 14,300 would see price reverting to the downside. Breaking above 14,400 would definitely see price reverting to the upside. CTC is in our favor. We do have an also some go. Ideally, we want to see break price trading above 1440 to give us a definite indication that we're going long. As we stand over here, we have resistance. This intermediate resistance will be at where price is trading roughly at now at 14,3610. So intraday 14.3. That's where we are now on an hourly. That's the high, 14,3610. That's the resistance level needs to be trending above, just above 14,3610. There we go. So we've broken lower. Now we pulled back. Now this pullback could be just a pullback of a break of a consolidation figure of yesterday's trading. You can see that the price was pretty much trading in a channel to the upside, and they made a break yesterday, and it's now taken us below the previous support area. So this was our strong support area. This is what's going to dictate today's trading. If it fails to break higher than that, then all we could see is consolidation around here, and then we could see a fall to the downside. And if that is the case, then the projection for this would be roughly something along these lines. So you'd have that is your initial move. This would be your pullback, and that would be extension. So 100% would take us back to the 200 period moving average, which is 100% of the initial move, guys. 61.850 would take us back to prior resistance support at roughly the 1427.50 mark. Take heed. Just on an hourly, fail to see the price trading higher than this 143700 mark, would definitely see price reverting to the downside, and those would be your targets. It needs to be trading above 1437 to be even considered looking at another reattempt of the previous highs at 14445 at least. So keep that in mind. You can see that 1440 there's a resistance on the 200 period moving average. On a 5-minute chart, you can see prices now retesting a resistance level. Notice on a 5-minute the swing highs, which is good, showing us, but we are now in a squeeze pattern on a 5-minute. Look for a 5-minute breakout. Failure to break higher and close higher than 14370 would definitely confirm that we're still looking bearish, and this was just a breakout of this consolidation area, breakout, pullback, and then we're looking for continuation to the downside. And our potential target would roughly be down here at 14310 to start with. The pair on the hourly is testing the upper trend for this time frame. Swing high, swing high, swing high. Loads of swing highs to the upside. If it breaks and closes higher than 14370, then you should be looking for obviously the buy signals to give you an indication of further upside movement, and then we should look at further extensions higher. Failure to do so, could see it breached and then pull down, and then obviously we could see these extensions to the downside taking fame. If you look on the 30-minute chart, etc., there we have it. That's your intraday support and resistance level. It's going to dictate play today. Notice swing highs on this time frame. There we go, being squeezed now. 50 period coming over the top. It's broken below a major support level that we've seen for a number of days. And if we don't see price reverting higher and closing higher strongly, then what we could do is see price pulling back, and then we should see a continuation to the downside in the next couple of hours. So it'll be interesting to see what happens for this pair. Next up is sterling against US dollar. Let's have a look at the daily. We can see that price fell to materialize and to push higher, and subsequently we've seen price revert to the downside. Yesterday was a very bearish day indeed for this pair, and what's happened now is we take a projection and you can see that we're now testing the 50 period moving average, not too far from 50 period moving average, but now we're also on the 50 period percent line, sorry, not too far from the 50% line, but also the 50 period moving average on this pair. So what do we need to see? Well, obviously we'd like to try and see price finding support at this in order to see a potential upside movement. Failure to find support at this area here would definitely give us an indication we're going to see further downside movement. If you're looking at 16,300 as the support area intraday, it's got to stay above that in order to be still considered bullish. Let's put that in. So there we go. You can see the 300 mark is the 50 period moving average on the 4-hour time frame. So price has to find support at this level. If failure to do so, we'd see price closing lower than that, and obviously we're going to see further extensions lower to the downside because it's not found. There we go. Another one idea. The 300 on an hourly time frame is pretty much the 200 period moving average on this time frame. So you can see the moving averages all helping out on different time frames to give us a better idea of support and resistance level. So in this case, the price has definitely found a support level at roughly the 1632.50 mark or 163300 mark for this pair. CTC is extended negative on an hourly. So notice we have a lower swing on this, and we've had a lot of swings low more abruptly at this time, but we're now consolidating now. You can see there's a bit of a channel, and it's testing the upside of that channel. So the high of this candle here, it's 16345 is the resistance level on a higher time frame. So on your 30-minute chart, look, as that is your ceiling level. So 145. There we go. You can see that clear resistance there and clear support at 13250. So consolidating box price has definitely got to do one thing. It's either got to be trading on the upper side of that, quite bullish, a nice bullish engulfing, counter confirm, push higher, or bearish consolidation, or a bullish or bearish breakout to the downside of 16320 to confirm more selling for this pair, because remember that under this we have both the 50 period moving average of 200 on higher time frames acting as a support level. So a break lower than that would definitely punch, a definite punch lower would confirm further downside moving for this pair. Notice 50 period moving coming over, it's trading well below the 50 and the 200. It's now playing with a 50 period, so just be aware, if this to remain bullish, we need to see a definite break higher than the box. A beautiful bullish engulfing would definitely give us confirmation of that, and we could see further gains, a bounce to the upside. Only concern is though, above that we have that very small range I mentioned earlier, so it needs to do a hell of a lot to actually convince us for further upside movement. At the moment now, it's pretty much trading on a precipice. 5-minute chart is going to give us that. We have the 200 period moving average moving over above us quite close. Is that going to be our resistance? If that's our resistance, then it's just going to push price lower, and then what we could do is see a trade to possibly the 320 mark and then lower if we get the sell. Next pair is the US dollar against Swiss franc. Let's have a look at daily. Here again we've seen price, the US dollar, losing ground against the Swiss franc. We've had a price support at 860, a bounce higher, and then a breakout, the pullback, and a failed pullback and continuation to the downside. We're trading an all-time low on this pair, and you can see the Asian market trading very flat at the base of yesterday's close, so indicating still bearishness for this pair. And ideally what we want to do is see a close lower than the low of yesterday at 8386 to see further downside movement for this indicated. So still bearish across the board for the US dollar against Swiss franc. You can see the consolidation on a 30-minute time frame moving sideways in a consolidation range. If it's to be remain bullish, then obviously it needs to be trading above its previous. It needs to be trading above the 8440 mark, and by doing so, it will obviously be trading above the 50 period moving average and the high for this time frame. Failure to do so, obviously we will revert. We'll continue to see negativity, and if it breaks its support area at the 8415 mark, then we'll definitely see price retesting the low that we saw at the 8385 and possibly lower. So it'll be interesting today. There's a lot of news out today. We've got unemployment claims today, Thursday. It's the Thursday before the non-farm payroll, so it could be interesting. Then we have factory orders month on month, crude oil inventories later. So it could be a lot that could push this. Remember, the Swiss franc, there is a bank holiday today, so I don't know if we'll see a lot of movement today. Ideally, those are still punching or coming together to figure out how we're going to best sort out the Greek issues. I think there is a plan in place for the Greek government. That will obviously still be on everybody's minds this week. But going into non-farm payroll tomorrow, we could see we have unemployment claims this afternoon. They're expecting a lower figure than the previous. So 424,000 was the previous figure. The forecast is 416,000. It'll be interesting to see if that comes out lower. Okay, so break below the 1441.50 mark would definitely see a further revert to the downside. Higher than 1444.40 would definitely give us an indication we're going to see higher or a higher consolidation on this pair. Last pair of the day is US dollar against Japanese yen. Daily, bullish, bearish engulfing, and it looks as if the US dollar is going to lose ground against Japanese yen. It's bearish engulfing, very strong, forming a lower swing than the previous one. The 8200 was the prior resistance level. This bullish engulfing failed to materialize, and yesterday we had, instead of price reattempting the 8200 mark, it fell to, and it's fallen and obviously engulfed that all that work of the prior day. And then Asian market trading, we've seen price trying to climb higher. Unfortunately, it's now trading at the lower end of its base, which is confirming this is pretty much a negativity creeping in. So ideally, if we see a break and close lower than the 80, what are we looking at? 80, 70, 50 mark at least, then we're going to see price closing lower. So got to close lower than 80.76. If it does that, then obviously we're looking at the prior all-time low on this at 80 as the next possible target. CTC is stretched in our favor. Remember that we are in a consolidation band, a long-term consolidation band, sideways, but the trend is down. CTC is extended down, trading above all. It's trading below all the moving averages, so we should be looking for downside movement on this pair. So intraday, 80.76 is going to be 76. There we go. Need to be trading below that. Notice the lower swings on this pair, on this time frame. Swing low, swing low, swing low, and pushing this lower. So you can see the major support area at 80, 70, 75, 76. Break lower than that, would definitely look at 80 being the next target for this pair. That's for today, guys. Hope you have a fantastic day. Remember that the Eurozone, there's a lot of bank holidays out there, particularly on the major forces. Today, this afternoon, we have unemployment figures stateside. This is leading up to non-farm payroll tomorrow, Friday. First Friday of every month is non-farm payroll. I expect a lot of volatility to play part, and it'll be interesting to see what it does, both for the major currency pairs, as we are now roughly around support and resistance, very crucial support and resistance levels on all time frames. If we get negativity on, if we see a lot of negativity coming out of the US, what does it do for the pairs in particular? Have a great day and trade serenely.